Hello, traders. It's 8:02 a.m. Chicago time on the 14th of September 2021. This is Tuesday. We're at episode number 2072. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's a static pre-market summary sheet taken. A shot was taken about a minute ago. Thank you for the mic check. We have a market that has mild risk on. We've run up a fair bit on the S&Ps, about 22 points from the SOC from the inflation release. So inflation was expected to be a key piece for us in the macro picture. And we got that number. The year-on-year inflation came in line and is relatively reasonable. The year-on-year inflation came in at 5.3%. Consensus 5.3%. Core inflation was expected year-on-year at 4.2%, came in at 4% better, and the month-on-month numbers are even better. Core inflation month-on-month 0.1% versus 0.3%. And inflation rate month on month came in better at 0.3% versus 0.4% expected. So we saw a market that shot up from what was a weak-ish to mildly unchanged market, and now we're higher. We'll see how the rest of the participants get into this and what they do with the banking stocks and all of the interest sensitive products out there once the market opens. But right now it's all a-okay, it seems, for the markets. So the S&P is up 15 points, 34 basis points. The Dow Jones 114 or 33 basis points. And NASDAQ 56.5, going relatively strong, or 37 basis points. If you look to the right in that gray box, you'll see the NASDAQ has an 18.5 point rotation. So being up 56.5 points is, what is that, 2.5 rotations, something like that, to take that back. So it's not all that great. That's what the rotation box, the daily range of rotation box, is there for. It's to give you context and perspective on how these things are moving. The Russell, again, is strongest. Russell seems to lead a lot, or exaggerate. It has a higher beta than the S&P for sure. The Russell's up 11.7 points, or 52 basis points. The German and European markets also relatively stronger. Crude oil continues to squeeze higher, and if you haven't seen this, check out Natty Gas. Good old Natty Gas. Your heating bill in most parts of the world here, especially in the U.S., we rely on natural gas for a lot of our heating and cooking versus electric, and this thing is just ramming higher. This is a 1-minute chart of the NYMEX and natural gas front month on a continuous basis, and you can see the beautiful structure it is creating. Those rectangles are zipper ranges or balance ranges, corresponding to high volume nodes, and we have a clear break higher. Natty Gas has been trading in the $3 range for quite some time. You can see the point of control just for the little bit that's in this that's displayed here. You'll see that the point of control by far is at $2.96, and so $3 is about the accepted price, and we're almost doubling it. This is something that is causing pressure, geopolitical pressure between Russia and the U.S. On a pipeline into Germany. A pipeline that is intended to double Germany's intake of Russian natural gas, and so on and so forth. But you could see the incentive for this political issue in prices. Prices are king. They represent everything that is there to know in the moment. So the energy sector is something to watch. Metals kind of sideways. Copper has been taking a beating, really has had a little bit of a pullback, and the treasuries are sideways, although we saw them pop higher on the inflation release. Of course, treasuries and currencies very inflation sensitive, and that's where we are today. Cryptos higher this morning. Ether is back up in the 3,400 range or so, and that's a quick recovery. It dipped down into 2,800, I think, for a little bit. Today, the ES overnight multi-distribution profile. It's got 3 distributions, one up at 44.75, a big one in the 65 range, 65 being the point of control. 65 saw a ton of trading yesterday before the point of control shifted down towards 51 or 52. The overnight inventory is 59% long. The range again is outstanding, 28 points. Again, the point of control is at 65.50. That's the big magnet from the overnight session. If you recall, also 65 is a former high. It is the August 16th high. This was the 56 and 65 were a lot in play yesterday. Those are 2 key figures to pay attention to today. As far as what's scheduled for today, we really have much of what we were concerned about out of the way with the U.S. inflation. We got some employment numbers out of Great Britain and so on, industrial production from Japan. But what's remaining is the crude oil API crude oil stock change, some Japanese numbers, numbers out of Australia, and a slew of numbers out of China. For those of you who trade that time of day, pay attention. China's got several releases at 10 p.m. Eastern. Not sure what that corresponds to you locally. Anyway, coming into the market, mild risk on, and that's where we stand. Several issues in China. There's a surge going on in China, and we know that they'll quickly jump to draconian measures, which will translate into economic consequences. Techs are weak again in China. Japan, COVID situation is improving. We're seeing some relief there. And then, of course, inflation, which is now out in the open, and natural gas surge. Those are all covered. Here's what was expected yesterday versus what we got. Yesterday, I talked about a decent recovery. We extended the prior day's low down, the Friday low, down a little bit before we pushed way up past the midpoint of Friday. The expectation is we would likely see a pullback from the 80, 81, 82 area down into 76, 74. And then I expected it to push higher into 01 or 04. That was completely wrong again, completely wrong on the expectations, especially for a Monday. The secondary is a push into 88 or so, and then a drop into the support at 56. Remember, 56 and 65 key areas. Expected it to drop into 56 and then to see a bounce. I expected a mild day yesterday, and what it ended up doing, and this was more correct than this, but the market did not find support. It took a bounce at 56, and that became resistance, but it actually ended up taking out Friday's low, which was not expected. Here's what we saw yesterday. A lot of rotations. Excuse me. A lot of rotations, a lot of activity yesterday. We opened, and we immediately, there's just a lot of bars here. Very active session. We saw a push into that 83 and then immediately pulled to the downside. And remember, to the downside, we're looking for 56, which ended up which is right here, 56. That was the extended target down. So we're looking for 74 and 56. And what happened is it pushed right through to the downside off of the open, and then it pulled back to 74. It pulled back to 74, setting up a short, and then the target would be 56 to the downside, consolidate, and then it ultimately got back to prior settle. Prior settle is 44, 49 and a quarter. We expect a tag of the settle if we open in range. That's a high probability play. So we push to settle right in here, and then we just consolidate and chop, make another attempt. This is now mid for the session before it creates another impulse down into 42, taking out the low of the prior session, which was 47. So we pushed 47 to 42 and then came right back to where 56, right here, 56, 56, 56, 57, 56, 57, 56. You see that? Very good structure, but that afternoon trade after the European close, which occurred right here, if I can draw a straight line, this became murky, and so there wasn't much to play with here. And then we move forward into the session, and we ended up pushing a lower low all the way down into 34 before surging back to where? 56. Settlement, 59 and a half. 59 and a half settlement yesterday. Pay attention to 65, 56 today if it gets down there. The SOC, who among you does not know what the SOC is? The SOC for inflation, for the inflation figure, is still naked this morning, and that's a 44.57. This is a news-based event. The SOC is open. It's treated like a gap or a closing price that is naked. It's treated like a key naked reference and becomes a magnet as we turn over, and it's at 44.57. So again, 56.57, 56.57. So that's a key area to watch. The SOC is the scene of the crime. It is essentially the point at which the auction was influenced from the outside and is disrupted. There's an excellent video on this at Convergent Trading. You can also find it in the glossary over there. It's basically where the auction gets disrupted and it remains as the last place that the market auctioned under its own power before news came in. We call it the scene of the crime in reference to arsonists. Arsonists tend to set a fire, run away, then come back to see what the outcome is. That's what an arsonist does, right? And that's the where they set the fire is the scene of the crime. And so we expect the market to recheck once it prices in that news. It generally pulls back and goes back to that SOC. Generally does it within the same session, but we'll see how it goes today. So we went from 57 to 79 in the overnight session with a profile that clearly rejected higher prices yesterday, balanced in the middle, and put in what was a weakish low here. That's yesterday's play. Again, we cannot rely on delta or volume currently because of the roll, which, by the way, the roll is about 75% done currently. Should be complete by tomorrow, end of session. And then we can go back to relying a little bit on volume, and then we'll have a delta hedging impact through Friday. So what do we have this morning? This morning we open, we test down, we come right back to the 5150. That's just a mid-century. It was the point of control of yesterday, and then we bounce off of it back up to the Asian Open consolidation, Then we come back and we test it again by a few ticks before we settle out at 44.57. And then the 830 number comes in and fires us through this trend line here into 79.50. And we're above the trend line. We're holding above the point of control, above the full session VWAP mid, looking bullish, starting to look like it wants to tackle that high. Remember, on the weekly, we are in neutral territory as far as trend, but on the daily, we are one time framing down, which means that the bears are in control of the price action on the daily chart. And so that means yesterday's high is important. This high here at 83.50 becomes an important target for those who want to reverse the trend on a day time frame. So look for a spike through there, a quick push through there, or some stops to get run. Once we get through there, there's some resistance above there at the 44.89 area, but overall, it's looking like it may hold these prices. Here's the thing: something's changing. There's a lot of what's called macro overhang right now. You've got COVID surges, you have the inflation and taper issue, you have supply chain problems, warnings from earnings due to supply chain problems. So you have high demand, lower supply causing inflation. It's expected to be transitory, but we're not seeing relief. There's this budget issue. There's a deficit. There's just a lot of overhang here. So the picture may be changing from a macro perspective, and that's why you should join on Thursday at 1 p.m. and listen to Jeff Snyder, who's the macro brainiac, to lay out what we're looking at and explain it and tell us where we're headed. I'll give you some information. It's actually pinned to the chat room on YouTube. Be sure to register for that. But currently, we are looking somewhat bullish. So I am actually reserved to, I am actually reserved in my expectation this morning. It's one of those situations where I'm not really sure what this thing's going to look like, because the last prediction given the wide range on Friday was we would have an inside day. We ended up pushing the low. So my last two key scenario plays did not pan out at all, and it made for scalping type of trades as opposed to full-fledged structural positions. So here's what's expected for today. Setting up the chart. Okay, so what are we looking for today? It's funny. Today, we have this line coming across here. The expectation is an open auction in range, pulls back towards the overnight point of control here at 65.50. May try to push through. Again, 56, 57 is key. Looking forward to make an attempt and then squeeze yesterday's high. I'm looking forward to squeeze yesterday's high. Why do I keep going bullish? I keep going bullish because before the open, the action is bullish. And overall, we're in an uptrend. So I'm expecting lower prices to attract buyers. You'll notice, other than Friday, you'll notice that it tends to rally into the close. So I'm expecting that to carry through into the, again, 44.88 area. And I'm looking for it to stabilize today and hold higher. Inflation looks good. That was one of the bigger overhangs, and it's looking pretty decent. So there may be some commitments. The secondary pushed the overnight high, 79.50, get into the 80, consolidate, push back to the overnight point of control, and then brings us back into the settle 56, bounce around 56, make an attempt, push through the 56, pull back to 56 right here. Remember the 56? Oh, running out of mouse pad. 56, and then start to work itself down back into yesterday's point of control, giving the bears more breathing room into tomorrow. So those are the two key scenarios. Again, the first scenario, looking for a bounce, like I've got to go with what the auction says, looking for a bounce, and then the secondary is a continuation trade down into balance of yesterday. The market generally doesn't reverse in one day. It doesn't make V bottoms, but we've seen so many of them recently. So I'm expecting a drop, balance, chop, and then that gives us fuel for buyers to continue to push higher to new all-time highs, or at least to get above 4,500. So that's where the secondary scenario comes in, and that sets up a rally from here. But who knows? We're into the end of Q3 here, and again, there are still some questions. Again, don't forget to register for Jeff Snyder's discussion this Thursday at 1 p.m. Go to ct.pro/Jeff-Snyder. Good luck, everyone.